And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And welcome to today's edition of The Real Investment Show. It's Wednesday, it's hump day, it's the last day of February. What? There's another day. Stretching this thing out some more. You think this month is never going to end, and they stick another day on the end of it. Anyway, just joking. Of course, today is the 28th, tomorrow the 29th, and of course, it's tomorrow, of course, on the 29th, on leap year, we've got the PCE inflation data, which the Fed will be paying attention to. So that's going to be the kind of the big market moving event for this month. So I'll take a look at that tomorrow. Right now, markets are just really kind of trading flattish over the last few days. We've talked about the market being in this positive uptrend right now, well within a trading range. Nothing exciting really going on. We make a little move higher, then we sell off. We make a little move higher, and we sell off. We're just kind of this gradual kind of stair step higher. And then, so again, it's just not been anything really notable going on. The big issue now, of course, is that we're running out of earnings season. So again, as we talked about, yesterday, 90% of companies have reported at this point. So we've got a few of the last few that are coming in. But for the most part, earnings season is now theoretically behind us. And so we're going to have to start focusing back on the economic data at least for another month until, we kick off earnings again. So just by the time you wrap this up, we get about a month break, and then we start earnings season again in April. So a couple of things with that, of course, also is that, one of the big drivers for the market has been stock buybacks. And, I got a question yesterday. It's like, when do these companies stop buying back stock? Well, that's about 2 weeks before we start earnings season. So we've got about another 3 weeks or so of stock buybacks yet in the market, helping support the lift of the market. Now that's going to start to taper off as we start to get into that blackout window prior to the April 1st start of earnings season. So at that point, we'll have about a month where the buyback window will be closed, and then those will start again. So again, it's just, that's just kind of the ebb and the flow that goes on. And of course, that's just some additional buying power that comes in. And, it was interesting because even Warren Buffett was talking about this in his latest report. We're going to have some of his wisdom in this weekend's newsletter. But in his latest annual report, he was talking about, stock buybacks. And it's one of the things that he said that is broadly missed by the, really kind of the market as a whole, is that CEOs of companies have just been buying stock to support their stock price, right? So they kind of indiscriminately buy shares back at any price. And what Warren Buffett said, and he's absolutely correct about this, is that buybacks need to be done at optimal levels. In other words, you need to be buying your stock when the value of the company is undervalued relative to the market, or how the market is suggesting that you're valued. So if the market's wrong on your valuation, you go, look, we've got a lot of really great underlying business that's going on. The market is discounting our stock right now. So I want to be buying those back at a discount. That's the optimal use of money, corporate money, with stock buybacks. Unfortunately, the vast majority of companies are buying their shares back at vast premiums, which has a negative impact to the company in the future, but it just takes time to get there. So again, it's just a very interesting point that he makes about buybacks, because again, companies are just kind of willy-nilly buying stocks back just to support EPS. And mostly, of course, that's to fund insider sales of restricted shares. So the SEC did an investigation on share buybacks, found out that the vast majority of share buybacks go to benefit corporate insiders. Surprise. Outside of that, though, that's just, what we're going to be struggling with here over the next month. A lot of economic data that we'll have. We're about to get the first glimpse at about to get the last estimate of fourth quarter GDP. So we'll see that. And then, of course, we'll start getting kind of first estimates of first quarter GDP, which right now is running at about 1.8, 1.9, 2%. So, expectations are pretty strong for first quarter GDP growth. We'll start to see that number in April. Okay, let's talk a little bit about what you need before the bell this morning. Futures are a little bit, this morning, not really doing a whole lot. And again, this has kind of been the story for the last few days. As I said, the market's really not going anywhere right now. We talked a little bit about small and mid caps yesterday, and interestingly enough, what we said yesterday is that in the short term, they certainly look a little bit better. We've had this sideways consolidation. We broke out of this consolidation for mid caps, for small and mid caps. So that's all looking fairly decent. But as we talked about yesterday, there's a very big lag right now between small and mid-cap stocks and large caps. So again, yes, they're trying to play a little bit of catch-up here, but speculation in small caps is reaching rather extreme levels. So when you look at call option volume, etc., a lot of speculation going on in this area. And this is the problem, as we talked about on Monday specifically, is that about 30% of these companies, actually almost 40% of these companies, are trading but have negative earnings. And so that's going to be an impact for valuations as we go along, particularly if we start to get an economic slowdown, which these companies are the most susceptible to. But nonetheless, these stocks have been performing well. So from a trading perspective, we've had a nice consolidation, a bit of a breakout. We're on a buy signal. So there is some real potential here that we could see small mid caps continue to play this catch-up chase to the broader market. But this is usually a later stage event. And because of the long-term lag in these stocks relative to the S&P, when we start to get that correction that we've been talking about, whether it's a month from now or 2 months from now, whenever it is likely that these stocks will lead on the downside as well. So just something to be cautious of. From a trading perspective, nothing wrong with them right now. From a longer-term kind of investment perspective, it's probably a bit too early to be expecting large gains from these, and particularly from a longer term perspective, as we talked about before, there's been a real lag between small and mid cap stocks and large caps since about 2014. So again, just from a diversification standpoint, be a little bit cautious with that. Outside of that, though, of course, the volatility index continues to remain exceptionally low. There's just really no fear in the market at all. If you take a look at, call option volume, puts, all those type of things, investors have virtually no fear here at all in the markets. And again, nothing wrong with that. This is supportive of that bullish attitude in the markets right now. And so the suppression of volatility, certainly not surprising, but that is the fuel. If we get a turn in this at some point, this is the fuel you need for a bigger correction, kind of like we saw in October of last year when we were selling off. Everybody extremely bearish at that point. It's like, oh my gosh, the world's going to end. Is the selling ever going to stop? Well, that was this summer sell-off that we had, and this is coming from, surprisingly enough, a very low level of volatility. So again, not surprisingly, you have a very low level of volatility, no fear in the market. Something occurs that creates that pop in volatility that leads to your sell-off in equities. And we've had a very long suppression in volatility. One of the longer periods here of just very low suppressed volatility suggests that something will happen here. Don't know what it'll be. Could be a week from now, a month from now, 2 months from now, as we said before. But once we start to get that correction in the markets, you're going to see a pop in volatility. So if you want kind of a signal to be paying attention to start reducing portfolio risk, keep a watch on the VIX. If we get really above 15 on the volatility index, something you might want to be paying attention to relative to your portfolio. Okay, that's what you need to know before the bell this morning. When we come back, Danny Ratliff's going to join me. We've got quite a few things to get through this morning. We'll talk a little bit about something I got an email on this morning as well, talking about, hey, I've got my mortgage paid off, but it's still killing me, prices. We'll talk about that next and how to navigate that. Don't go away. More of the Real Investment Show coming right up.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show. Danny Ratliff joining me this morning. Good morning, sir.
Hey, good morning.
How are you?
Doing great, you?
I'm good. I'm glad you're feeling better, by the way.
Much better that I can finally talk today.
He was The Walking Dead last week, so.
Man, lost my voice. It's been, there's good and bad with that, though, right? Because you don't have to be a disciplinarian. You don't have to, you know.
You know, it's funny. There's a lot of memes out there. It's like, you know, when the wife is sick, you know, she's like completely, you know, out of it, and she's still having to take the kids here and clean the house and do all the stuff she's got to do. And when the guy's sick, you know, gets the sniffles, you know, he's like down for the count. So,
what do they call it? I think there's a word for it, isn't it? Like,
I know what my wife would call it, but I can't say that on the air. So.
Mansplaining or not that. It's something else, anyways. Yeah. But yeah. I'm sure she would agree.
But no, listen, you have my sympathy. My daughter had what you had. She's up at college, and she was just completely laid out with whatever's going around. And she went to the doctors and twice, and they just kept sending her home and say, just go home and get Theraflu and you'll be fine. Just take Theraflu, you'll be good. And so finally, we have my wife has an old bottle of penicillin. I don't know how old this bottle of penicillin is. It's from when our kids were little, but we had, yeah, I know, right? It's really, that mold's really worked its way up. And anyway, she got in the car and drove up to see her and gave her the penicillin, and she was well in 2 days. I mean, fixed
That's
it right
amazing.
up. So,
yeah.
And but yeah, so just sometimes it's the old remedies.
Well, I think we get away from all that too often, right? I mean, This thing kicked me in the rear. I hadn't been in a long time. The doctor's like, yeah, it's been a while. I said, well, every time you give me bad news, you get on the scale and you're like, oh, crap. This thing is broken again. What is wrong with this
when
place?
you get on the scale, it goes, oof.
Yeah. That's what like, oh, let me take some out of my pocket real quick. Hold on. Like that's
You're stripping
help.
down.
Yeah.
I got to have your shoes off.
Sir, please keep your clothes on.
Anyway.
Yeah, not fun though.
So, got an email this morning, actually late last night, this morning for me. A guy asked, I thought this was a good question for you, Danny, because Dave Ramsey got himself into a bit of a kerfuffle here just recently because a gentleman called in to Dave Ramsey. Again, I don't have anything against Dave Ramsey. Great debt counselor. His investing advice, not so much, but debt counseling wise, he's the guru, right? Him, Susie Orman, the crew. But anyway, so somebody called in and it's like, hey, I'm making 150. I don't know the exact number, so don't quote me on this. But the call was generally like all his calls are, is I make $150,000 a year and I'm, in debt and I can't make ends meet and I can't, kind of get things going. And so Dave Ramsey does his normal shtick, which is to start, tell me about where you're spending your money. And so he's like, I spend $25,000 on childcare. He's like, what? That's crazy. $25,000 on childcare. And as we've talked about this before, that's what you get when you inject a whole bunch of capital into the economy, send people checks to go get childcare. Everybody raises the cost of childcare. So we've had this huge surge in childcare costs. We've also had, because of a lot of these stimulus checks going out and stuff, we've had increases in other costs like food and insurance and all these other costs. The Affordable Care Act has created, very unaffordable healthcare. So, these are the problems that people are facing. So, and it was an interesting email that I got because it was kind of that same vein of, I'm in this position, I'm trying to save more money, and I'm getting hit with all these other costs. Now, interestingly enough, so the email is basically this, is that I don't have any debt, right? So that's good, right?
Great.
Paid off his house, no credit card debt, so no car debt, right? So nothing. He has no debt whatsoever. So great. He says, but I'm struggling with the cost of insurance, the cost of food, of course, and just other expenses, taxes, et cetera. So and this is just the problem that everybody's facing right now. It seems like the more money you make, the less you wind up with, because everything just kind of getting drained. And especially if you have young children and you have a 2-income household, like most families are. We have a big surge in 2-income households because it's just how to make ends meet, which means that you've got to pay for childcare. And childcare, without a doubt, is very expensive.
Yeah, I mean, depending on the age of the children and what type of care you need, absolutely. I mean, we can make arguments where it may be more beneficial for somebody to stay home depending on how much they're making. So I think some of the problems with what you just mentioned, first of all, you see a lot of times lifestyle creep. It doesn't sound like this is this gentleman's problem.
Right.
But you do see that, right? You get the raise, you go get a nicer car, you get a bigger home, and everything begins to get more expensive. But now I think that even the people that have done the right things, they're getting punished as well. Mm-hmm. And so this is where it becomes extremely difficult because, like Dave Ramsey, where do you spend your money?
Yeah.
Where do you spend your money? How do you spend your money? And this is where I think it really begins to pay to shop your insurance, get an understanding as far as what that is that you're paying. And when's the last time you did? A lot of these companies are not incentivizing you to stay any longer, right? They'd rather get rid of you and get somebody new versus keep you as a client. So it may be better for you to go look around. And, Richard and I were talking about this the other day, I think on the show, and he's like, man, I shopped. I couldn't get anything better. And that may be the case.
Well, I guess it's a question, right? I mean, you have to make some trade-off choices. Also too. So if you're really trying to say, so yes, if I'm shopping right now, insurance is high, but just take homeowners insurance as an example, right? So you own a home, so you want homeowners insurance. So do you fully insure the house, or do you maybe insure it for less and take the risk, right? I mean,
most people don't have that luxury of having that to make that decision, right? Most of them have a mortgage and you have to fully insure it.
Right. Well, in like his case, his house is paid for.
Yeah, correct.
Right. So do you maybe, and again, these are the decisions you have to make. Nobody can make these for you.
I'm not giving any advice on that.
No, this is not advice. I'm just saying
that somebody's house is going to burn down. They're like, Lance, you told me.
Well, no, but my question is, this is where you get into this challenge, right? This is the problem, right? Is do I fully insure it? Do I change my healthcare plan, to try to lower my cost of insurance?
Yeah.
And I can do that, but then at the other side of that, I've got to have a really high deductible to lower that cost of monthly insurance. And so then when I get sick, it's, $5,000 or $10,000 or whatever the number is, to hit that deductible, right? And these are the trade-offs that you're trying to do. But this is, and as you said, I think the big problem is that most people don't have this choice. You're not making enough money right now to really have a big set aside for these out-of-pocket expenses you're willing to pay for. And if you've got young children that are all on your insurance, they're in the doctor all the time. So your insurance is going to be higher. So for just a lot of people, when outside of your debt, right, which again, in this particular case, he's paid off all his debt, which is great. And if you have a lot of debt, I think that's your big focus. If you want to lower the cost of your lifestyle, get rid of your debt. But outside of that, I don't think you have a lot of flexibility.
Well, I think you just have to be creative, and that's where you're going to have to start thinking about how can you better spend money. Our biggest expense, just an example, food. I mean, 3 kids, growing, eating us out of house and home.
You feed them once a day.
Picky. But yeah, right? Good luck with that. I don't know.
Locks on the pantries.
But ideally, so we like to kind of food prep.
Right.
Or just kind of plan throughout the week. We don't eat out often. If we eat out, it may be once a week. It's on the go because we're in between kids' activities, things like that. But for the most part, and if we do eat out, we typically split meals. So
that by the way, your kids aren't old enough yet.
No, they're getting where it's not working anymore.
Yeah, exactly. You're right at that point.
No.
You know, I take my son out now, and it's like he orders 2 meals.
I know. We are there, and it's not working as well as it did. And the one who gives me the biggest grief is 9. I'm like, oh my gosh. But we noticed that there is food that will go to waste.
Yeah.
Because, inevitably something else pops up. We don't get a chance to eat what we were going to, or somebody goes somewhere else. And so what we started to do was go to the store more frequently, which is a pain in the rear, but buying for a day or 2 at a time. And then nothing goes to waste. It's very specific. You know exactly what you're going to use it for. And you're not spending anything extra, right?
And it was interesting because we had this conversation a little bit yesterday. There was an article talking about, I was talking about food costs yesterday a little bit on the show, and it was, people making decisions to try to lower their food costs, starting backyard gardens as an example, to grow some of their own fruits and vegetables, those type of things. But also making choices to downgrade what they're eating. So instead of, chicken and this, they now have canned tuna and noodle casserole, right? Those type of things. I'm not recommending anybody do this, but I'm just saying is like people are having to make these choices to try to lower the cost of food because, again, we just saw recently that food is now making up 30% of incomes. It's the highest that we've seen since the 70s, where you have such a very big part of your daily budget going just to pay for food.
No, that's exactly right. I mean, I believe it, and it's an unfortunate event, but there are ways you can do things without sacrificing if you plan properly. Somebody else just mentioned on the YouTube channel, go to the Real Investment Show. If you want to chime in, let us know what your biggest expenses are. Kids' activities, and oh my goodness.
Yeah.
I mean, I think about growing up, like the activities that we probably all had.
Yeah.
How they've changed.
Oh yeah, because when I was growing up, it was like, here's a stick, here's a ball, go play.
Yeah.
Yeah, that was organized
and
baseball.
Your
by the way.
baseball coach may have brought like 2 or 3 bats for the whole team.
Yeah.
Right. And now everybody has a personal $300 or $400 or $500 bat. It's crazy.
Yeah.
No, those activities do.
And Scott brings up a good point on the YouTube chat as well. Cobra is extremely expensive. So, once you kind of migrate out of that corporate environment where you're getting compensated for your insurance through the company, and you go on Cobra, that's a big chunk.
Well,
and private insurance is just crazy.
Yeah, unless it's subsidized, it is through the roof. And what we see, that deters a lot of people. And so we're talking about people who are younger right now with children, but people that are going towards retirement and maybe they want to retire pre-Medicare age.
Yeah.
It is such a large burden that many people have to continue to work.
Yeah.
They just can't afford it.
Yeah, absolutely. Yeah, so and basically, in regards to the email, there is no solution for you. As Danny said, just this is the struggle that everybody's struggling with right now. And again, there are areas that you can work on to lower those outlays, debt being one of those. But once you get rid of your debt, it becomes a lot more challenging for the average American. So, all right, quick break. We'll come back. Interesting talk about food prices. Wendy's now inserting surge pricing in their food. We'll talk about that next. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Oh, Red, I declare, I plumb missed that Candid Coffee. Whatever am I gonna do?
Don't you worry, little darling. We'll watch it again on our YouTube channel.
Why, Red, I never.
The Real Investment Show YouTube channel has all of our past presentations, from Candid Coffee and Lunch and Learn to special topic discussions, and all of our live show recordings preserved for you. Subscribe now to the Real Investment Show YouTube channel, or look for the link on our website at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Remember, February, 29 days. So they're just going to drag this month out as long as possible. A friend of mine, his son's getting married. They have now scheduled their wedding on February the 29th.
The Real Investment Show podcast.
And so this is genius, though. On his part, he's only got to remember his anniversary once every 4 years.
Exactly.
So, now, the bad side is if you forget that, you're really in the doghouse.
Well, there's that,
right?
yeah.
So
at realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
welcome back to the show this morning. You know, it's funny when we talk about, prices of everything, inevitably us old guys, we're all, and it's the same thing on the YouTube, my skateboard was $20. And I was like, he paid $20 for a skateboard? When I was growing up, we took a 2x4 and took old roller skates, the metal ones, and then just took the skates off and put them to the bottom of the 2x4. Those were skateboards. So, it's just interesting, because, I remember back as a kid, the things that we were doing, and now we talk about kids today, and they've all got to have cell phones. They've all got to have this. They've all got to have that. And like Danny said, organized sports are off the chain. Just the cost of what it takes to put it. And look, I did the Danny thing. I coached baseball, I coached football, did all that, and just it's amazing what that stuff costs now.
Yeah, just the obviously it's the age, but just seeing the expenses that go along with it, and then parents make it worse, right? It's like,
well, no, that is things like when I was coaching baseball, like these are kids. These kids are like 8-9 years old that I'm coaching baseball, and they're paying for private batting coaches and private pitching coaches. Like these kids are going to be the next.
You're left behind now. Yeah. And then it's like we bought jerseys in the fall, and now parents are like, do we need a new jersey? I'm like, no, we do not.
Yeah.
Oh, we need to go play this out-of-town tournament. I'm like, no, please, no. I'm not looking to spend my vacation with y'all. I love you guys.
Yeah, best thing ever, kids left for college. So my expenses went way down. So talk about expenses, though. I thought this was just really interesting. We're just kind of short note. We got some other stuff to get into this morning, and just since we're on prices of food and everything else, just kind of stuck to me. There's an article in Market Watch talking. So Uber, as an example, Uber and Lyft. If you try to use an Uber or Lyft at a peak time, the price goes up. It's called surge pricing. So if there's a lot of demand, say there's a concert in town or a sporting event, whatever it is, the cost of your Uber is going to go up because of this surge pricing, right? So a lot of demand,
Demand equals higher prices. Thought it was interesting, this article, Danny, about Wendy's now applying. They're going to have a digital menu. And so when there's a big rush of business and demand for particular items, the prices of those items will dynamically increase.
So I've seen places do this before, right? There's actually a bar kind of close to our house back in the day that they opened. It's called The Exchange.
Right.
And every beer had a ticker, right?
Right.
And if everybody was ordering one thing, the prices would go up. So it's that dynamic or surge pricing.
Sure. Are they still in business?
No. No. They didn't last long. I think like it was a novelty of it. I think we went once, like a bunch of buddies, like, oh, this is kind of a neat deal. And I'm like,
Not in business anymore.
Well, everybody else is like getting what
Wendy's just trying to give you a little hint, a little heads up, buddy.
Well, I'm curious. So, do they do this on like a local scale, or is this something where they have their systems integrated and they look at everything across, all of their restaurants and say, this is the time? Now, what I think this would do for me is, if I was going to eat Wendy's, which I don't, I would just go at off times,
or just order stuff that nobody else is ordering.
Well, of course, but you may not want that. I don't think Wendy's has this robust menu that you're going to go and be like, oh,
I guarantee you that nobody's going to Wendy's and ordering the salad. So,
Well, does Wendy's even have enough traffic to validate surge
There's
pricing?
a reason for that. Yeah, no, that's true.
When's the last time you were at Wendy's?
I can't recall.
I don't go to fast food.
Years.
Yeah,
So
we don't eat fast food. So, though Chick-fil-A, it's somehow not fast food now, but
no, that is necessity and Cane's.
That's God's chicken.
No, we didn't. No, we just, because again, for us, as soon as our kids left the house, fast food died.
Yeah.
Fast food was a convenience item when we had kids, but and it was Chick-fil-A, it was whatever it was, and when they became teens, it was Cane's. But now it's, me and my wife, we cook.
No need. Yeah.
Yeah, we cook. So.
Yeah, so I don't know.
Boring.
But the surge pricing, I mean, like you said, Brent, I mean, do you actually have enough business to drive, to get some type of chart here on this?
I'm interested to see if it just works or not, or if people just, if people kind of rebel
Well,
at
I
this
think
point.
everybody's already mad enough about how much food costs. Now you're going to say, what? You're going to charge me instead of $10, $12 for this burger because 3 other people in your restaurant ordered it? Absolutely not. Get lost.
And that's the thing too, right? You go there, you go to McDonald's. I mean, it's getting to be ridiculously expensive even to order food at McDonald's. I was talking. There was a guy on a video the other day talking about $18, for just a burger, and it's just getting, the cost is just getting, again, we just go back to this, just the impact, and again, this, and from an economic standpoint, this makes complete sense, and this is why. Despite these booming, we talked about yesterday, these booming economic numbers, GDP, 2%, 3%, whatever, presidential approval ratings on the economy are, kind of in the toilet because the average American's going, this is, you may tell me the economy's doing great, but I'm barely keeping my head above water, if at all.
Speaking of presidential things.
And that's not. Go ahead.
Well, I'm just noticing, Brent, you've got all these patriotic themes behind Lance here. Is Lance ready to make a run now? Finally,
yes, we are going to
not
make a
we.
run.
It's you.
Yeah, in 2075, I'll be rolling out my presidential campaign.
Well, I mean that's probably in line with our current.
I got to get to the right age.
Yeah, you need to have that experience.
Once I turn 106, that'll be the going age for presidents at this rate.
We want to make sure there's a lot of experience.
So, all right, hey, let's talk about. I'm going to write an article this weekend about Warren Buffett's latest report, and so Warren Buffett over the weekend, every year, everybody looks forward to Warren Buffett's annual letter that he puts out, and of course, this was this past weekend. So everybody digs into this letter immediately to see what pearls of wisdom that he's going to impart. And so, in this weekend's newsletter, I'm going to pick a couple of things that he talked about. One was, in particular, his big problem right now, which is he has $160 billion in cash and can't spend it. And the reason he can't spend it is because he said, look, if I make an acquisition, it's not going to significantly move the needle. And the reason for that is that, A, he's very large, but B, there's no opportunity to deploy cash at a valuation that generates large outsized returns in the future. In other words, what he's telling you is that, yes, I have $160 billion in cash, but there is nothing of value to purchase. And so if you even take a look at Warren Buffett's favorite metric of market cap to GDP ratio, it's at one of the highest levels ever on record. And so just basically what he's saying is that the markets are so overvalued, I can't deploy $160 billion in cash. Right? Because he could. With $160 billion, you can buy a lot of big companies. But if they're overvalued, they're not going to create a return to the company because you overpaid for the asset. That's what he's saying. And so I thought it was interesting that, he made this point. Everybody kind of skipped over that part. They just said, he's got $160 billion in cash, but can't put it to work. There's a reason why he can't put it to work.
Well, like you mentioned, you got to move the needle. And he's also, he did pay Charlie Munger some very nice compliments, obviously, and there's quite a few actually. But one of the things I think that he mentioned was, Warren, forget about buying another company like Berkshire. But now that you control Berkshire, add it to wonderful businesses purchased at fair prices, and give up buying fair businesses at wonderful prices.
Right.
That could be part of the problem too.
Right. But it is. That's exactly what his problem is. He can't. Everything is now wonderfully priced. They're priced for perfection.
Yeah.
And so you can't buy something at a discount and that's the whole purpose of investing, right? The whole purpose of investing is to buy something at a discount and it inures to full value, and that's where you make your gain. But if you're already overpaying for that asset to begin with, then your downside risk as it returns to fair value is going to outweigh your future return. And so that's the problem that Warren Buffett's saying, is that there's not an opportunity to deploy that cash. And there's maybe small companies out there that he could go buy at a reasonable valuation, but
they're so small.
He can't deploy enough cash, right? I mean, and what's it going to do for the overall business, right? Nothing. I go buy a small, $100 million company, and it does nothing for a business the size of Berkshire Hathaway, which is almost $1 trillion in valuation. So, that's his problem. He's got to buy something where he spends $50 billion on it, $60 billion, that type of thing, and brings in this value of cash flow and operations, et cetera, into Berkshire. And that would meaningfully move the needle. Because again, he doesn't measure success based on price. He measures it based on earnings and profits. And that's what he looks at. So when he does his report, he says, our profits were this. And so he's got to buy a business that generates profits at that level. And that's very difficult to do when you're already overpaying for everything.
So could he, I don't know, I'm thinking out loud here. I know you got BRK A and B, right? So you got two different share classes.
Right.
Could you create a separate fund within the fund?
Sure.
I'm sure he's thought of it.
Yeah.
But then again, I guess it still doesn't, you still have the same problem.
Yeah, no, he could create a whole spin-off business, right? Yeah. And that that's something else that he could do also with Berkshire, is to start to spin off some of these businesses he owns, take them out public. So in other words, he owns Geico Insurance, just picking one. Seas Candies, these other ones that he owns, spin those off into their own IPO, realize that cash flow from that operation, that spin-off operation, that value, he nets that value, but then he loses the operating business because now it's a separate business.
Yep, correct.
So you get these one-time hits on these spin-offs, and so that's another challenge for him.
Good problem to have.
Yep. If only you could invest like Warren Buffett. Start with $1 billion, and then go from there. All right, be right back after the break. Get ready to wrap up the show. I lost $240,000 after a friend I met on Instagram encouraged me to make an investment. We'll talk about that when we come back from the break. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So welcome back to the show. There's a long lesson to be learned, and you know, over time, I've run into this quite a few times over the years. And again, I've owned other, several firms over time. I've had different books of clients, and one of the things that always happens, and this happened back in 1999, early 2000. It happened again in 2007. Heading into the financial crisis. It happened heading in 2018, 2019, I saw this happening. But whenever markets get really exuberant, that is when, there's this pull to play catch up, right? I'm behind the market. I need to make a bunch of money, and everybody's just making money hand over fist right now. And that's where you start getting a lot of these promotions, particularly in social media. Today more than ever is, hey, just, I've got this program. And again, if you ever, I try to clip them on our Twitter feed as an example. Every time I post something on Twitter, there'll be comments at the bottom of bots that are out there. It's like, oh, Mr. So-and-so, generated, so much money for me trading, this or that or the other thing. These are all scams, right? But scams are easy to get sucked into if you're not careful. And even good investments can turn out to be bad investments if they're done at the wrong time. And as I was, for instance, I had a client of mine at one time that pulled his account out because a friend of a friend had told him that his buddy was trading currency and was making all this money, and the guy was just like a money printing machine, and he just needed to do this, and he was going to make all this money. Well, he pulled all of his money out, gave it to this person. And I was asking the questions. I was like, well, that's fine, but is this guy licensed? Is he registered to manage money? Is he, it's like, oh no, he's just a guy. He's a friend of a friend. He's just doing this to help me out because he's my buddy's buddy and those type of things. Well, the guy ran off to the Caymans with all of his money. And that happens all the time. And this is why you've got to be very careful with the allure of outsized gains. And again, there's some very basic things to look as portfolio managers, as advisors. We are registered and regulated with the Securities and Exchange Commission. We have to abide by laws. We have fiduciary standards we have to apply to. We have custody with, major institutions, so assets are protected. And so once you get outside of that, that's where it becomes problematic. I have a very good friend of mine, an attorney, Tom Ajame, who is an SEC attorney, and he was telling me, and he used to be on the show when we, years ago, and this was heading into 2008 as an example, and he was telling me about, Bernie Madoff, and he had a client in Idaho that had written a check made out to Bernie Madoff personally and mailed it to him in the mail for $5 million. It was all of his money. And of course, you know what happened with Bernie Madoff. But that's what happens when people get swept up into these, ideas of these outsized returns, these massive generations of wealth. Oh, this is going to make me wealthy overnight, those type of things. There are things that can do that. And there are things that people have done that have generated vast amounts of wealth very quickly. They just happen to hit the lottery right in the market on some stock, right? We saw a lot of people make money in Tesla early on. We saw a lot of people make money in NVIDIA just recently. But those are rare opportunities, and generally those don't happen on a consistent basis. And you're most likely not doing it with all of your wealth at one time. So, those are the things. So just be careful. The point of the conversation is that there was an article on MarketWatch talking about how this person, and again, this is very prevalent today and something you've got to be really careful of about social media. He was, a friend that he met. These aren't your friends. On Instagram.
Let's talk about what is a real friend and what is not, right? I think that's number one.
Just because they like you does not mean they're your friend. But anyway, he says, I met a friend on Instagram who encouraged me to invest. He invested $240,000. Well, he invested money. He lost $240,000. But that's the lesson to be learned, right, Danny?
Yeah, well, I think that there's a couple things that we always need to take it into mind. And so I came across this article and thought, well, this is pretty timely because we've had a couple clients here recently who've been approached. Mm-hmm. And luckily they didn't send any money, but they've reached out and said, hey, what do you think about this? Or have you ever heard of this? I'm like, well, talk to me. Who's giving you this information? And, it's a friend of a friend. Okay, friend of a friend. Describe, please. Yeah. Like, this somebody you met at a party that you just met? Or is this a friend of a friend through social media? And what I find is that 9 times out of 10, it's a friend of a friend, somebody you've never technically met on social media, something of that sort, right? But, they know so-and-so that I grew up with. They're good people. Mm. Well, they basically groom you, right? They become friends with you. They don't even talk to you about these investments for the longest time. And they're just, you think they're truly a friend. And there was actually an interesting word for it in here. What did they call it? Pig slaughtering, or what was it? There was an interesting word that they used for this for these people who are coming up, and they're basically they're fattening you up, right? They're trying to get you ready to take you to the slaughterhouse because they want you to get primed and ready to go because they're trying to build your trust, build your confidence. And then essentially they're going to say, well, give me $1,000. Let me show you what I can do with this. Or have you ever thought about this? And then, you feel good because you get your money back. Then they do it again. Then they do it again. Then all of a sudden it starts to get a little bit bigger. And so this guy here in this article wrote that he gave somebody initially, he added 40,000, then added another 40,000, gained confidence in them.
Yeah, it's called pig butchering is the term.
There you go, pig butchering. Thank you, Lance. Then they added another 100,000. So now they can't get their funds, but this company's telling them, if you want to get to them, you have to pay your taxes first, which are 150,000.
Yep.
Which supposedly is 15% of his profit. Number one, that's a ton of profit if that's actually true.
Right.
Number two, you're never going to send the money to them to pay for your taxes. You're going to send it directly to the IRS. So, I think the problem and the issue here is that we just want to bring light to is that it's very easy to get caught up in this. And it's very easy to feel like this is, okay, look, this is done well. Okay, I can put a little bit more. I can do a little bit more. And as we're doing that, we've given them that confidence. We've given them control of assets. If you're ever going to do, number one, like this guy said, my advisor said afterwards, number one, why in the world didn't you call your advisor?
Right.
I mean, that's what we're here for, right? And I will tell you, man, that sounds like a fantastic idea, or that is awful. This I can assure you, I would have said, this sounds too good to be true. And that's what I think that most people need, but a lot of people don't want.
Yep. And it is interesting because this guy actually does have a financial advisor in the letter that he wrote talking about this. He said, I'm especially upset. I think I'm a pretty educated guy. My financial advisor said one of her clients lost $2.7 million in one of these type of scams. So, he had a professional to call and didn't call. Right, it's like making a decision about your health and not calling your doctor, right? So, it's just this is that problem, and again, this is a particular big problem for the older generation like me, right? Because we're not all tech savvy and all this, so elder fraud is getting to be a real problem, particularly because of social media. It's easy to prey on elderly people through social media. They don't know better. They don't really understand how the system works. They don't understand, the finances in a lot of cases. And so it's very easy to lure some of these people through social media because, again, they become your friend and they're your ally. And, you talk to this person every day, but you've actually never met them. There's a whole show on MTV called Catfish, right? And it's very easy to do that. You set up these fake profiles. We talk about this all the time. Is like, for instance, there are people that have imposter accounts of me on Twitter that are promoting crypto scams. And they replicate our Twitter page, they replicate our feed, and you'll know it's a difference because they'll have like 1,000 people following them, right? So it's, and we're a verified account, and they're not. So, be careful. Just because it's on social media and because it sounds, this person is representing themselves as an expert doesn't mean they're an expert at all. Just be real careful what you get into.
Yeah, there's a special place for people like this, right? Somebody just mentioned
jail.
They're even, hell. Somebody just mentioned that they're even going as far now to create videos. You think of what AI can do, and it could literally look like you, Lance, and say, hey, send your money here. And I would always recommend, don't ever do it without physically talking to somebody, but make sure you actually know them. Put your hands on somebody. I had the worst thing I've ever seen and I've ever been through with somebody is I had a client who was widowed. She was lonely. She met somebody exactly like this online, and they befriended her, and she needed a friend. And next thing you know, they were in Africa doing oil and gas work, exploratory work, and their equipment was stolen. They needed some help. Send a little bit of money. Don't worry, when I get back here into town. And I was putting the piece, I said, no, first of all, we're not sending some random person money. That's just not what's going to happen. But she went behind our back and did it. Yeah. So much so that the company I worked for, decided, listen, we've tried to help you. You can't be a client. But she basically gave away, she had retired, she gave away almost every dollar she had to this person who was not real. So much so, I even got on the phone with this person. Like they were yelling at her to wire money one day, and I was like, let me call this person.
Interesting.
But they have gotten bolder. They have gotten braver. You have to be diligent to protect yourself. It's an interesting time that we are in, but please be careful.
Absolutely. All right, that wraps up the show for today, and make sure if you're going to put your hands on somebody, ask their permission first.
Say what?
You said go put your hands on them.
Go put your hands on them. Come on. Good
All
Lord.
Right. Have a great day. We'll be back here tomorrow.